Welcome back to my YouTube channel. Today I want to try to show you guys this how do you call it, the Bitcoin stuff. Since from the day, if you guys remember, I did send a analysis about the Bitcoin when it was somewhere here where I was expecting, because I had this level mark. I'm sure, if I'm not mistaken, this level was my area where I wanted for market to buy. Plus this consolidation we have been playing inside here in this consolidation. But to the end of this video, I'm gonna show you about the cycle, because I see so many people that have a problem how to identify a cycle and what they have to look in the market. From the previous video, I think I made the breakdown about this one, how I sold from here and this area and what I've been looking here, but I end up missing the trade because I was not focusing on it anymore. Because it was consolidating so many days, then I end up even forgetting, because I took a buy here, it went up, come back again, and I was expecting another buy, sell somewhere here, if I'm not mistaken. Like all these, I think my chart is my breakdown is gonna show you guys what I was expecting from here. But the only thing that we could do most of the time is, okay, we know this is the higher point for us to target when we are buying. Let's say from here, this is gonna be our next big liquidity area we are going to target. So all this was just the area where we're supposed to target. I'm sure there was this area, there was again somewhere here, if I'm not mistaken, where I end up marking. I'm sure it was here. I was expecting market to react from this area, yet market reacts. And if you check from the buy position, they created this liquidity, because this one was like a SR flip, so RRS flip. Then market come to the downside to come and fill this hidden base, so we can mark, because the way we select the hidden base is from the top to the downside, somewhere here, you see. Or if you wanted, you can say market just fill straight this imbalance, the one that was resting here. But so far, even from this hidden base, that could be a perfect entry for you. Or if you don't know how to take the trade here, you wait for market when it's giving you this shift. You see this shift in the market structure, because they failed to break this low. Then when the next candlestick open, here is gonna be your entry. So that's if you know the candlestick pattern. Let me show you first the chart, guys, because you know me, I like when I talk with what I know. I don't just talk like I'm talking crazy. Do you see, guys? So this was my area. I was expecting market to buy, and I had all this level markup, because from my sell then to the buy zone, because this is where I was expecting market to buy. Then I did not expect market to run the high. So my main issue was, because we had the break of structure here, then market has to react from here, then we drop again to downside until this zone. But this end up not happening. Then this is what happening, you see, from that area all the way I mark here, market has to get there, buy again, then we have to sell, you see, all those kind of stuff. So I did mark all of them. Let me see on top. No, it's not that one. And then there was this one also, the way it was going. And then after that, there was this one here, because I did send this one to the group, where I was asking people what is happening on this zone, how they are collecting orders. As you can check the date, this was June, not even today. This was June this year. And then, yeah, this is what ended up happening. I'm sure you can see. I'm sure this is, yeah, this is the last picture that I took from there. So now here come one big story of how you need to take a trade. Let's say you take your trade from here, the way you refine your entry. Can you see what is happening here? Do you see what is happening here? We still have a strong demand area that if market can come more to the downside, we're gonna look to see if market is going to do what? Is going to buy from this area, because all this zone, the one we have here, they're going to act as liquidity. And this one we have here, this shift in the market structure, is also going to act as a liquidity, like from this drop. and every time frame got its own price cycle. So when market is going to any level that you understand, you need to know that there always be a cycle somewhere. When they complete the cycle, market has to reverse. I know if you have eyes, you can see. This is what I'm gonna tell you, because if you check, this is one. Let me just change the color. You just need to, like, let's say, let me put this Asian range. You just have to open your eyes to see, and this is a correction. When you have this push movement, sorry, this drop, then what you wait next, after we take out the low, you just need to wait for market to do it, to give you a pullback. And the pullback, it's either you can use your Fibonacci, because it starts to be either at the 61%. This is why you see most of the people that they trade Elliott-12, they always use a big stop loss. Then here, if we add one level, you're gonna see maybe that is where it touch. I think it's gonna be 7.0. Let me just add that area. Where is it? Where is it? Where is it? Where is it? Let me just add it this side. It's gonna be 7.5. Do you see there? So this was the area where they did what they did. I'm sure they did touch that one before they sell. So this could be a perfect entry, because from the 50% above, all this zone here, this zone here, this is your premium zone, where you have to look for a continuation trend. When market get there, then you can apply the Fibonacci just to have, like, say, a confluence of you taking the entry. Or if you don't know what to do with it, you just leave it. You wait and you try to refine the entry, let's say somewhere here. This is where we had the base that was being ignored. People that they know how it trades, they will understand this. This is a rally, base rally. Markets supposed to buy from here, because we have a demand area after this break. So market supposed to buy from here, but then so we're supposed to see something like this. Instead of doing that, then market just manipulate that demand area, then they drop to the downside. So when they drop to the downside and they break structure, so in the break structure, it already signal to us that, okay, we have the confirmation that market is gonna continue going to the downside. And plus we have that area, as you can check, we have again the ident base somewhere here. But if you mark the ident base here, maybe you could miss. Or if you know how to trade the QML, you could get the QML from here. People, they expect QML to be a perfect picture. The only thing that you need to understand is the concept of QML. What is happening in a QML? Because here we have the high, then we have the low, we have the higher high, market take out over. You see from this area, take over, then we return. What do you get as a confirmation for you to sell? Check what happened. This is what we call a 3D. We touch 1, 2, 3, then market sell. You could get your entry from here to come to the downside. Then this is what I was expecting, market to come and react from this candlestick again, because we took out this area. But what do you understand from here? It's just that market is already complete the cycle. You see, this is the last push, the one we call the push, sorry, push number 3, because here we have 1, we have 2, then we have number 3. So let me just mark for you guys, because some people, they try to get confused on these things. Where is it? Okay, sorry, this is number 1, because let me just reduce. This is number 1, this down, because here we get a reversal pattern. You see, this is what we call the M pattern. It's called a reversal pattern. Other people, they call it a stop ant. They run this buy side liquidity, then market drop. So this is number 1. Going to the upside, this is the one we call number 2. Number 3 always be the longest one. I'm going to show you guys some example so that you understand what I'm talking about. Sorry, this is number 2. I read number 3. What the hell is going on? This is number 2. The one that I wrote there is number 2. That is wave number 2. And if you check, this is what other people, they call complex pullback. The complex pullback you're going to see is where market is going to give you the ABC pattern, then the drop. So we have the A, then we have the B, then this is the C movement that is coming the downside, and the same one that is wave number 3. So we have the wave number 3. Then when market gets here, let me show you something. When market gets here, then market, this is 3 from down here. That is what we call number 3. 3 is the longest one. Then we have number 4, this one. You see where market stop. That is number 4. This is wave number 4. Then from down here, you see we took out these 3. We took out. That is what we call number 5. So already they've already complete the cycle. Then this is market has to reverse. And if you check for people that they're trading these things of pattern and whatever, you know, let's say the flags, here is a proper flags, you know, the big correction that's happened here, where we have the A, B, C, and E, whatever it is, so that the market can change direction. When you just understand this, you know already the reversal is coming. The reversal is going to happen. This is why you see when someone is selling here or someone is selling here, then he's not going to go out of the market, because what he understands that market has to give me something like this. So if I don't see something like this, I'm not exiting the trade. Let's say market just go, then 1, then market give you 2, then 3, then you have your 4, number 5. You have to see the reversal pattern, then market fly to the upside. It's either this reversal pattern like the one happened here is going to end the liquidity, then go to the upside, or what is going to happen is market is going to give you a shift. This is also is another thing that you need to look, or is going to give you the equal lows for them to buy. But in this case, what we have here, 5 took out this one, but it fell. This one come and fell. So already from this zone, we have what we call a bit of shift in a market. Then market fly like the way it fly. So if you count again from this area, you're gonna see it's the same thing. It happened over and over. You see. So from here we have the same thing that is happening. You can mark yourself and you see we have this push. Then we have this one. Then we have the last one that give us a reversal pattern. Then market start dropping. So it's the same thing. And if you check, if you go, let's say, to H4, you're going to see again inside here, before we get this pullback, you're going to have again the same 3 push to the upside. So it happened over and over. Even here, if you check from here to here, if you go to H4, you're going to see it's the same thing. H4. If you go to H4, you're going to see, and this is a nice one because it completes everything, the one that was happening here. You're going to see inside this H4. Then if you want to mark, you're going to say this was the first one until there. Then we have a correction. Then market push again from this correction until this area. We have another correction. Then markets give you this big one, the last one. Then we have again what you call the ABC. You see the ABC pattern, that is the one that gives you a proper correction, because here markets come, then we have the A, then we have B, then we have C. You see, I don't know if I'm making sense. So you need to go and watch the other video where I explain these things properly. Because this is just a quick one for you guys to understand. This ABC pattern, that is the one that we call a complex pullback, because market just come to the downside after this drop. Market give you this B, then A, then market give you the B movement. Then from the B movement, this is your C movement. Then from this C movement, you know already when market is buying here, market has to give you again another 3 push to the upside before we get a reversal. So if you don't see that, you don't have to do it. You don't have to change your way of trading, of saying, no, maybe I'm gonna sell now from here to go more to the downside. This is how people, they eat stop loss, because when you don't understand this one, you don't know what is going to happen next. You see, like here, it's a correction. You have another correction, the one that happened here. Then market give you this last push, the one that was happening there. But what do you see? Here in between, we have 1, we have 2, and we have the number 3. So when you go to all those three, then you know already what you are waiting for is you are waiting for a reversal. Then where is your reversal? It's the same story. I'm just from explaining to you guys. It's the same story. A, B, C, then we fly. Again, 1, 2, 3, then we reverse. This is what I was asking you guys in the morning. What do you see? Because now if you check daily is already complete the cycle. This is why you see market is dropping. But remember, what I was explaining on the beginning was the target was for them to run this eye. So since we are running that eye, what do you wait for? We are waiting for market to give us a reversal. Then this reversal on daily is going to be a correction on daily. So it's going to be the, let's say, somewhere here. This is where market is going to start buying, maybe until this area. Then the last one is going to be the longest one. Then from this one, then market is going to give, let's say, maybe a stop out. Then we fly again to the upside. So this is what you need to understand. But inside here, before market reverse and give you this correction, you need to see 3 drops. Market has to drop 3 times. And by looking with your eyes, if you just open your eyes, you're going to see we have 1 correction, number 3. This is 1, 2, 3. Then market is correcting again, then creates wave number 5. So this wave number 5, what do we expect next? We're expecting a correction. A correction can happen anyhow. Sometimes it's just going to be, let's say market just do something like 1. Then we drop again. Then from dropping, we need to see again 3 of this stuff before we see that, okay, this one also is complete. Then if you go to H4, the same story, then what are you going to see? You just mark your stuff. This is the reversal pattern. They go to the upside. When the cycle is already complete, the only thing that you are waiting for, is the reversal pattern. It either is going to be a shift and drop, or is going to be a stop ant. Then we drop. This is the things that we look. And the last one is going to be something like this. What people, they call a double top. And don't follow those foolish people. They're lying to you that you cannot sell from here, because when market gets here and react to this one here, so you need to get your confirmation somewhere here, then you sell to go the downside. But what they are telling you that double top doesn't work is when you have a double top like this, even someone who doesn't have a brain, he understands already this one is going to become a liquidity. So when market is coming, let's say market is coming to the upside like this, when market is coming to the upside like this, I'm not going to look for a sell again on this area. I'm just going to wait for market to run that one. But these people, they are trying to make fool of you guys to believe that maybe smart money is the one that is working and this one doesn't work. No, it's not like that. Because I'm going to show you so many examples in the charts. If I want to show you where there was a double top or double bottom and markets buy from there or sell from there. So that just don't let people to fool you. This is how they are. So just focus in what is working for you and make your best of it. And if you can check again, why did the market is now stopping here? Why is not dropping crazy again? It's because market is already complete the fucking cycle. We have a reversal pattern, the stop ant. The stop ant is here. You see? This is your stop ant. People that took long here because they saw this demand and they believe market is going to go to the upside. Then market just run this area. All people that they have, let's say, buy stop, market show them, okay, we are flying. Then check next minute. The next candlestick that's open, boop. Then here we have demand swap. This is what we call a swipe zone. Markets return here. But if you check, you are trading, let's say, smart money concept, whatever shit it is, you are trading it. Then if you check here, what are you going to see? And what is the reason of it selling from there? We create liquidity. This one was liquidity. It's what we call an FTR, an inducement, because this one was trying to go back, but it fell. Since market come and give us a clean break, what do you expect from this one? We expect market to come and sell from that zone. But what you're gonna see, people, because we are trading hidden base, people they think market is just gonna get here and sell. There was no liquidity for them to come and sell from here, but there was a liquidity for market to sell on this block. So this is the things you have to understand. Okay, we have one. This is number two. The number two here is the one we call a correction. So the correction is from this area. This is correction. Then after that, we get the number three, going to the downside. Number three, it happened until here. Now let me show you with the Fibonacci what happened there. Okay, this is my Fibo until this downside. You see where market went in the zone where we have 61%. Most of the time it happened on the 61%. It's above what you call the 50% equilibrium. I'm in my discount area. Then from my discount, what am I gonna look for? I'm going to look for a sell position when market is above my discount. Or if I'm failing to take a trade here, I'm just gonna wait for the low time frame somewhere here to get the confirmation, then I go down. Then we go down again, market did what? You know already. This is number three. Number three is the longest one. Let me show you guys how you're gonna get the number three to know where number three is going to happen. Because so many people, they don't understand. How did this guy know market is going to reverse from there? The only thing that you have to do, you see, like if you put the Fibonacci for the first time, you put it like this. You see the way I put. I start from the top, coming to the downside. Then if you want to get where market is going to reverse, then I change my Fibonacci. Let me just delete. Then I start from the downside. So I start from where market reverse, like here. Then I put it until the top. So I'm going to know where exactly market is going to do it. It's going to make a reversal. So on this case, you see where there is 1.61%. So this is the zone there. Already when market is getting here, then I'm going to start looking where I have to do it. Let me just fix it properly. So when market gets here, this is where I'm going to start looking for me where I have to do it. I need to look for my for my buy or sell zone or whatever, you see. So this one, as you can check here, there was nothing that is going to like help me to get the trade, because this one was acting as liquidity. This is why you see these people that are trading, let's say Leo 12, they have big stop loss. Why? Because there is no precision on what they're doing. What they do is just to follow only these numbers, and they know these numbers market has exactly to reverse from there. So the only thing that I have that advantage of it is because I understand this other concept, because I know, okay, so I have this level, this is gonna be my zone, like the way I took the gold. You see the way I took the gold entry, so I'm gonna know, this is my area. Or people that they trade, let's say the FEG, they're gonna say also, yeah, this is my area. So, and market has to get here, and then market is gonna do us, it's gonna buy. So this is what you have to look at. And if there is an extension, this is what you're gonna see market is gonna get until this area. Then we give you the wave number 3 from this area. And I believe market has to drop until this area to complete the extension. Then from there we're gonna correct, we're gonna have number 4. Then yeah, market then is gonna continue dropping. But from here so far, you're gonna say this is number 3. Then from number 3 we have the correction. A correction, that is what is gonna be wave number 4. So a correction, it happened like this, because people that they trade flags, they know these things. You see, this is a flag, whatever, the A, B, C, then D will drop again. So you're gonna see, it's so simple, guys. It's so simple. We just have to know what you're doing and we apply. Let's say if you have a buy, now we get the buy from this area. Or because you are correcting here, you see, to create a nice liquidity for them to come and buy on this zone. Let me show you. Okay, this is a level of liquidity. They're creating liquidity for them to come and buy from here. Then it's gonna be 2.6. So already from here, the market is going to correct all the way until this area. You see, until this zone here. So guys, it is what it is. I hope this video is gonna make sense to you. I don't even know why I record this video, but I hope you are going to enjoy it. So sharp guys.